Hello students, welcome back to IBS. Our today's topic is budgeting. We have already discussed and closed our strategic planning related stuff. So now we are going to discuss about budgeting, and our first topic is budgeting concept. Let's jump to the topic and understand this one by one. So my first question will come: how to control future? So basically I have asked this question just so that we can think. We can control our future with the help of budget. With the help of budgeting, we can control our future for the period of time, okay, for particular period. So that power is called budgeting is a systematic approach and empower the organization to control their future and provide a roadmap, as I have explained in my previous lecture about the when we have set a target for writing a page. Okay, so that is called roadmap. Based on that we can verify our performance, okay, for managing expense, income, asset and liability. So for company we have few things only: asset, okay, expense, liability and income. So these four things we need to manage, and for that we have to use systematic approach to calculate this and control our future for particular period. It is that is not control. I'm trying to say 100% we can control our future. No, future is uncertain, and we just trying to take such kind of approach where we can calculate our risk and measure it so that we can verify later on where we stand and what we did or what where we went wrong. Okay, so for all these things we have to focus, and for that we are creating this kind of budget forecast. Okay, so now we should understand about the definition of budgeting. What exactly the meaning of budgeting is a systematic process, okay, of planning, allocating and controlling the resource to achieve organization goal. Now we will take one example to understand it. For a company there is cash inflow, okay, and cash outflow. Cash inflow will come, we will try to find the resources from where the cash will come. So resource will be revenue, rewards will be your product. If you are selling or you are giving any service, you have invested somewhere, from that investment you will get a return or something. So like all the resources we will calculate and find how much we are going to generate cash. For example, we are generating 100 million of total cash as in revenue. Now we have to plan our cash outflow, how much to generate this, how much we have to invest. Okay, like if you are manufacturing or you are service, for service you have to give employees salary and all, so payroll cost will be huge. And if you are manufacturing, your labor and material cost will be huge, so those expenses should come here. So that cash outflow we have to plan. Suppose that plan should be less than 100 million, and then also you have to target your profit. Suppose we are targeting our profit around 10 million, so you have to make such a plan of your outflow so that your expense should not go beyond the 90 million. Total revenue is 100 million, your total expense is 90 million, and you have generated your profit 10 million. So this one you have to plan, and this one you have to calculate, and this one you have to plan how you can manage this. Okay, so allocating and controlling the resource, and here we'll consider this as a planning. We are planning our resource, from which are the resources we are going to generate our revenue and how much. If we are not going to generate as we are expecting, suppose we are going to generate 95, then you have to again modify this, you have to reduce your cost to 85 anyhow, so that you can generate your planned organization goal. You can generate your profit as the organization has set a target to achieve. So this is where the finance controller or finance professional work and systematically calculate. The systematic process is designed and made by finance guy. This is the explanation about the definition. I think I have explained you very detailed what exactly the budgeting means. Okay, now we will discuss about the purpose of budgeting. The purpose, what would be the purpose? Goal setting. Okay, 10 million profit, 90 million expense. Okay, and 100 million of our revenue. These are the goal we have set it. Resource allocation, we have to, when we have set our goal, we have to plan to allocate resource within this. In resource you will have a lot of things like how many uh, asset we have, how much asset we have to buy, how much labor require, how much material require. Okay, so how we are going to achieve, how much system require, which technology require. There are n number of things you have to plan, okay, to allocate resource within this budget. Now performance evaluation. At the end of the period, when you generate 10 million what we have expected, then it is well and good. If you have achieved more than that, that will be great. If you generated less than that, that will be considered as a loss or not effectively use of resources. Okay, so this is the purpose of budgeting. I think we shall move to another topic. So now we will discuss about key component of budget. In budget there is mainly three component: revenue, expense and capital expenditure. Okay, these are the three major component of budgeting. Okay, let's discuss another point: type of budgeting. There are so many type of budgeting. One of them is capital budget, operational budget. Operational budget are all budget which is related to your process. Okay, manufacturing process with regard to your payroll. If you are a service company, your payroll will be the major operating expense. Okay, and then your maintaining company administrative related. So all this will come into your operating budget. And capital budget is for longer period of time, and that is also being planned, okay, for your long term goal. Okay, so this is capital budget. Under capital budget will come as in making a building for office. Okay, making office building, investing in some construction, long term investment is been done by company will be considered under capital budget. Financial budget are your income statement, cash flow and balance sheet. These are three major financial budget we prepare. Okay, also we prepare cash budget. This is different than cash flow. In cash budget we make a different logic that we will discuss in our master budget, and various other different type of budget we have which we will discuss. So now we will discuss about difference between budgeting and planning. So what budgeting is normally for 1 year, okay, or maybe 5 year we make financial model we make for 5 year. But if you are making more than 5 year, 10 year or 20 year, that is useless, because 10 year and 20 year industry and technology and environment are completely changed. So no point of making too long forecasting, too long financial model. Okay, so if you talk about planning are 10 year normally. 1 to 10 year planning are normally the thing which we have discussed previous various lecture into last section regarding strategic planning about the company goal for 5 year or 10 years. So that should be more longer period. Okay, involve process setting goal setting, defining strategy and outlining the action needed to achieve this kind of objective. And budgeting is focus on quantifying. So whatever we have outlined the action to achieve this, that has to be quantify, okay, as a financial aspect. Like then we quantify and make provisional income statement and cash flow and balance sheet based on this planning. Okay, so now we will discuss about scope. Strategic and operational aspect is the scope. Their scope is financial aspect like balance sheet, income statement and cash flow. Time frame normally for longer and short also if required. This has time frame for long or normally annual. Okay, planning tend to more flexible. It should be flexible. It should capability and capacity to change based on environment and circumstances. And budgeting are concrete, because if you will not set your target, then how will you verify your variance based on target? So that is why it should supposed to be concrete. Okay, financial commitment. With regard to our financial commitment, if you will not be concrete, then you will not be able to create financial model or a professional provisional income statement, balance sheet, etc, because you have to stick to particular point there. Based on that only we can create the back end all the calculation. Planning role to make a strategic plan. Okay, how we are going to achieve where we want to, and how strategical suitable for our business based on our requirement we plan. Okay, budgeting convert plan into action. His job is to plan, his job is to convert the similar thing which quantify. Okay, There we are, here we are planning, here we are calculating how to convert this plan into action. Okay, this is all the difference. Let's jump to the another topic. So now we are going to discuss about benefit or advantage of some well developed budget. Okay, so what exactly a well developed budget do? They will promote coordination and communication among the organization unit. If you are working in a company, there are so many business unit like marketing, HR, finance. So budget, what budget will do? Budget will assign task and target to all the different company. Okay, and later on they verify it whether you achieve or not. So there is a lot of communication and coordination is required. So well developed budget will be made based on coordinate, and they will involve all of this team member and then make the budget. This is if you are sitting to the room and made the budget, okay, without being informed to this kind of team, so what will happen? That budget will not be effective. Nobody will feel, aligned with this budget, and nobody will be, motivated for this particular budget, because they will feel this has been, forcefully asked us to do without knowing the ground reality. So that is why these people will not feel connected with this kind of act is being performed. This kind of activity is being performed by company management or whoever is making the budget. So that is why communication and coordination and involving all the team is very much important. Provide framework for measuring the performance. Obviously, as I give an example, to write page 10 per day is the target, and if you are writing a high or low, that based on that we can measure the performance. And other motivation, offer motivation to manager. Obviously, if you will be communicating and involving all the team members, that they will feel, yeah, this is the target we can achieve what we feel. So if they will achieve, they will get bonus. Okay, so they will feel connected. When you are setting such target which you or I can achieve, then I will feel, yeah, I should work hard so that we can achieve that. If something has been set very very far from our expectation, our potential resource don't allow us to reach that level, so then what will happen? Everybody will think no point of working hard because we will not achieve, and at the end of the year we will be asked for the question. So whether I do hard work or not, it is going to be issue is about to come, because they have set something huge kind of target which we cannot achieve. So everybody will is disconnected, and they will not feel to work for company management as per set target. So that is why they should make such a budget which is realistic and achievable so that your team manager and employee feel connected and they work toward that goal. Okay, now I will talk about facilitate the efficient allocation of organization resource. So if that is I am keep on telling you, based on our revenue target, whatever we are going to regenerate revenue, based on that we have to plan our, all the cost. So that is where effective allocation of organization resource. The cost is company resources actually. This is company income, and this is the company resource. Or either we have previous profit, that profit we are using to bear this cost. For some company, revenue doesn't come before. For example, if you are a payroll company, so your employee will be given salary, then you bill, and after billing a couple of months or 10 days, 15 days, you will get your revenue. Okay, so revenue will come later, expense will come before. So the cost you are putting here and in giving salary and all, so that is company resource. Those allocation should happen very efficiently. Okay, serve as a mean for controlling operation. Obviously, when you set a correct target and all, we can check and verify issue and resolve and control. If somebody has not completed their target or not achieved their target, so we can ask relevant and right question to them. Okay, so that understand the problem and understand the scenario and market condition. Act as a tool to check process, obviously, and toward the organization goal, whether our target was 100 minus 90 our cost and 100 million was our profit. So this budget will help you to check whether we have achieved this or not. Okay, so now we are going to discuss about the crucial role of budgeting in organization planning. So let's know one by one. Planning, first of all, management initiative for planning process. They will take initiative and make plan and outline their objective and goal. Okay, outline their major goals also and objective, and propose course of action which is required, how we are going to achieve based on our plan act as a strategic guide. This plan will act as a strategic guide for providing vision for company future after 5 year 10 year where we wanted to go. This is all helped by planning. Okay, and then annual profit plan is nothing but a budget. Okay, management plan involves into annual plan budget. Okay, it means to say they involve in annual budgeting and quantify the objective. Whatever they have planned, this plan has to be quantify and quantitative term. Okay, budget identify necessary resources. What are the resources we have? I mean to say, what are the net profit from previous years or cash we have? What are the asset we have? So these are the resource from where cash inflow will be. So those are the resources to be identified and their allocation. So cash inflow, then we have to plan cash outflow where we are going to expense, so that we can monitor curve our expense to right direction. Feedback loop, obviously budgeting will provide a feedback loop for quantifying the potential effect. So basically what they are trying to say, based on budget, whatever the resource and expense we have planned, we are doing according to that or not. If there is variance is coming, then feedback loop will help to identify the issue, find solution if possible. If not, adjust yourself. Adjust in the sense, if you have targeted 100 million revenue to next year 200 million revenue, and then at the end of the year we have achieved 120 million revenue, so then we will go through with this process, variance analysis, understand the issue from marketing team or operational team, and then revise your budget, adjust that. You can achieve from 100 to 120 only, we cannot achieve 100 to 200 directly. So 100% jump is not possible, 20% we can go. So from next forecast or budget, we will make 120 into 20%, 1.2%. Okay, that would be 1.44. Okay, 144 million we can predict. So not like last year we from 120 to not 144, you will plan 200 now, because you think 120 we have achieved last year, now we will achieve 120. No, this is not work like this. If last year it has grown 20%, you have to think how better marketing is and how our industry is, can we achieve that or not. If it is not achievable, just setting a blind you know expectation will not lead to any result. Okay, setting a realistic budget will help company and all the team member to connect together and work hard for that. Okay, so here I'm going to discuss about how we are going to achieve this kind of budget, or I would say the power of budget, how we can achieve. We have to promote communication and coordination. We have to coordinate among the team member. Okay, we should talk each other and understand and each other problem and bring solution to the table. Okay, provide framework measuring the performance. Obviously budget help to rectify the variance and understand, motivate manager and employee. If you are making budget based on management or based on employee agreement, if employee and your manager are agreeing they can achieve this, then they will feel motivated and they will work toward company goal, so that once they complete this task they will get promotion or bonus, whatever it is. Promoting efficient allocation of resource, I'm already talking about this. Strategic decision making under the constraint. Okay, a strategic decision you have to take under the constraint. If you found any issue, you have to take a strategic decision accordingly. So now we will jump and prepare a simple budget for initial understanding. Okay, before we going to another topic and understanding in depth about the financial model, take an example so that our mind will prepare and ready for this. This is the quarterly amount, this is the annual amount. Suppose IBS is a coaching institute. Okay, he provides service. So what are those services they provide? We have listed out, like tuition fees, enrollment and registration, course material, textbook, okay, certification exam, online course platform, corporate training, consultancy, and other. So whatever the nature of resources from where revenue can generate has been listed out, and then we have plan how much monthly we will generate and how much quarterly we will generate. So here we have taken, for example, quarter one. So quarter one we are assuming monthly we will generate 500 and quarterly we will generate. This is something which actually we are going to generate as we have predicted. Okay, so maybe from January to March, and people may give revenue March revenue will come to April, like this. So for December also we will get revenue in Jan. It depend on nature of business, whether you are billing first and getting paid later, or you are billing in advance. So based on that you have to understand business and calculate. Okay, so based on that, that has been calculated. So what are the revenue term we are going to generate, all listed monthly wise, and then multiply into 3, and then we got all the revenue. So total revenue is anticipated 11,700, okay, for particular quarter one. And then we have calculated quarter two all the revenue. Okay, like this we have calculated quarter 3 and quarter 4. So after clubbing all quarter together we get annual quarterly revenue. So this is around 46,800. This is the calculation. This is how a company normally make a budget. Okay, thanks for watching. See you into the next session. Thank you very much.